everyone. Hope you're well. I've had some problems trying to get started today, but hopefully we can see and hear each other now. So, key day Thursday. We've got some key data out. We've had claims which are back in that 200,000. But the big news was ADP, the private payroll, came in at 128,000. Expectations were 295,000. So, private jobs less than half of what was expected this week, and last month was also revised to 220,000. Building permits was also much weaker than expected, which is relatively good because it's that's a suggestion that inflation may have topped out. But we said oil's been over $120 this a week alone. Now it's come down quite significantly in the last couple of days. Lots of volatility thanks to the OPEC meeting. But even so, that's adding to ongoing inflation pressures. And then the challenge of job cuts as well. That came in at where were we? 15 minus 15%, an increase of 6% last time. So again, that's relatively sort of good news, bad news, but it's relatively good in the whole scheme of things. So anyway, we'll see what happens as the news moves on during the summer. Obviously, your expectations are very much all about the central bank tightening. We saw the Bank of Kiwi yesterday meeting expectations with a 50 basis point cut, and all eyes remain very much on the Fed. Good news yesterday was obviously the relaxation in the 25 million people that have been in a very, very strict lockdown in Shanghai. That's been eased as quickly as it was put on, but the Chinese authorities are still very much about making sure that their zero policy is maintained. So let's have a quick look at the charts. We've got the dollar here against the euro at 107, which is back over 107. So we've been down as low as 106.30 yesterday. We sort of sideways in the Asian session and have rallied during the European session to breach that 107 pivot point. You see here how we've been pivoting through that level really over the last few, obviously last significant number of days. Let's have a quick look, run through the others as well. So dollar index. So we've rallied significantly from this 101.28 low we had on Monday before the month ended. We rallied a bit into month end, still couldn't break the 102 to close the month out. Yesterday we were up, we went to 102.75, and then we've rolled over today and we're back to test 102 just ahead of the US Open here. US Open in 10 minutes. So dollar remains relatively well bid. Obviously, we've come down off this big down leg we've had through the second half of May into the end of the month. Tick up a couple of days, but capped, as we say here, yesterday and so far today at that 102.75 level. So dollar, still, I'd say over 100 is still very, very well bid on in historical phases. So it'd be difficult to bet against the dollar. We've had this shakeout a wee bit from 105, but we went to 101.25 area, but 102, 103 is certainly back in play as we move forward. And very difficult to bet against the dollar in the current circumstances with this continuing. Where are we? Continuing bid for Fed tightening, and obviously the uncertainty with regard to the war in Ukraine as well, unfortunately. So not sure we're actually connected here, but anyway, we'll see how we go. Where am I? Let's just go back to the chart. So that's dollar index. Euro, as we said, we're back to 107, pivoting through that. Sterling had a bit of a significant shakeout yesterday. Earlier in the week, we were up here at 120.60 zone. Couldn't get over that level here. Here we are. Over that level towards the end of the month. We came down and shook out as the dollar came back into the month end around the 126 level. We dipped well over 100. One big number here from 126 under 125. as low as 124.60 zone yesterday. Recovered from that today. Good day for sterling thus far. Big start on the European session, back over 125, and we're back to 125.50, so another 50 basis point rise. CAT at that 200-hour, which sits at 125.78, so 125.78 upside target in the US North American session. Our support is that 20-hour moving average at 125.25, and then the big 125 handle itself for cable. Let's have a look. No, there's no connected here. So, where am I? Where do we get to? Sorry, it's cable. Yen, dollar yen. So it's had a very good week. The dollar, the weakening yen this week. So we've gone from 127 all the way to 130, rolled over from that into the close yesterday and again this morning in the Asian session. We're down a tad at the moment at 129.70, so it's really struggling to get over 130. But historically, that's a very, very high. That 130 level, as we can see here. Let me just take this a bit messy, but let's have a look at the weekly chart. You see, we were obviously 131. Strong week thus far this week. That's the weekly candle as we had 3 weeks to the downside, so back to 130 cap there at the moment for this week. But certainly a stronger dollar against the weaker yen. Lots of chatter from the Prime Minister and Kuroda, the head of the Bank of Japan, this week. Worried about the weak yen, but it's got anything but strengthened this week so far. Aussie is bouncing off the .7150 area here. This is the hourly chart again. So we've bounced here, on Tuesday. Wednesday we were higher into 72.25. We're back there again now today. So another strong day for the Australian as the dollars are weakened thus far from the strength we had in the Asian session. Strong European session for the weak European session for the sterling for the dollar, and we're to the upside. Dollar CAD continues to unwind. We're under 127. We were under 126 at one point. I put that on there, but 126 is just down here. Did we go under? Actually, we didn't get to. I thought we got under. Sorry, we got towards it. So that's 126 there, which we got towards yesterday. And we're sort of last 3 days we've been within that $100 range. In fact, it's a little bit tighter, isn't it, with the machinations that are going on out of OPEC. The Saudis saying they will replace any lost production from Russia. That meeting is ongoing. I haven't seen actually any output from that, but the OPEC meetings tend to leak a bit like a sieve, so lots of information on that. So that's dollar CAD running sideways. Kiwi, like the Aussie, has had a strong day today, so we were down at 65.50 zone yesterday and again this morning. See those lows are still getting lower, but we've broken out today on this 1 hour chart earlier on today. That would have taken you long here with this crossing strategy there, like we've just seen earlier. So the 10 o'clock candle was a tick up, and we're still long with that long strategy, having been stopped out a couple of times yesterday, going up and then short, but the short one worked out. Long now into 65.30 at the moment. Yesterday's highs being tested again for the Kiwi. Next level above that for Kiwi traders, it takes us back to earlier part in the week when we went to 65.60 to the upside. So 65.50 next strategic level. Dollar Swiss was our biggest mover this morning on a big surprise for a big spike in Switzerland. So they'd been sat on the sidelines as far as inflation in Switzerland was concerned. Big surprise this morning. We had a strengthening dollar yesterday from Tuesday's lows down here at 95.75. We were back to test it here today. This morning when that spike came out, bit of a retrace. Was it? No, another classic sort of little intraday levels if you want to play it intraday. You can see That's our level that's our range for the day, isn't it? So we didn't get. Let me just zoom that up. Classic little Fibonacci level. So big candle down here is weak. We retraced more than 50% of the big down angle so far today, but that's where that level sits today on this particular asset. So for the Swiss, there we go. Just put that there. So that's our 50% retrace of the day at 96.05. So just over the handle of 96. The key Fibonacci level of 61.8 didn't hold. We didn't get to it. It was rejected. So that's our rejection level. So it's 96.12. So that's been rejected. The 96.05 has been rejected. And now we're moving back down again. So your next target, we're now under that key level. So, we could be testing this 95.75 again, maybe, who knows. But that's a, big down leg, bit of a retrace, and no more weakness as we go into the US Open as we stand. So let's have a look who's on. So apparently 42 people are watching. What's happening with pound? Matthew says, no, sorry, Nokwa says, what's happening with cable today? Well, we had a huge day yesterday, Nokwa. Let's just go back to cable. I mentioned it a minute ago, but let's have a look at it if you're asking about it. So cable, we had a huge, this is obviously the week. This is 126, this yellow line up here, and we were sort of pivoting through that earlier in the week, weren't we? So earlier in the week, we'd been rallying nicely. We had weaker dollar, so we rallied over the key 125. 125 for cable is a big psychological level. Not only is it 5 and 0 involved in it, but it's it's a key level. So we've been to test it 1, 2, and 3 times now, and bounced off it quite aggressively. So it's clearly some buyers down here on the 125 level. We've rallied today. You're just asking about today. Big up candle here, just like we just had a look on the Kiwi. Big up candle here from this consolidation here. Remember, the longer it consolidates, the bigger the breakout can be. It was on news. It doesn't matter what it was. In fact, it's moved. Big candle means direction. We've had these big moves down. So again, if we do that like we did yesterday, like we've just done now. So yesterday's range for cable was this. We had a huge move yesterday. Okay, so 50% of yesterday's move takes us through this level here at 125.36, which we breached on the third candle of the bounce up. Okay, you can see that was there. So we consolidated down here. So big move down in 3 consecutive hours yesterday. Cooled when we got to the 125 level. We went as low, obviously went lower than that, 124.60 zone. Then consolidating the Asian session. Buyers back for sterling on the open Europe, even though that London's closed, remember, today and tomorrow, not open again till Monday. But certainly sterling buyers, it could be dollar sellers as well. Both that combined will move that pair up, obviously, but it doesn't really matter why. But that's a big candle, big long position. Long positions triggered here this morning at 10 o'clock on the completion of that candle, and it's been long consecutively since. Looks like it's running out of steam as we got over the 125.50 area. Doji candle in the last hour, and now we're consolidating at 125.50. So next resistance to the what sits here at 125.75, where you can see the 200-hour moving averages. But not unsurprisingly, the 61.8 Fibonacci level from yesterday has also come into play. So that 125.55 is where 61.8 of yesterday's move down is, and that's where we start today. It's not magic, but time and time again, those Fibonacci levels are quite significant. So going forward, this is our support now, that 50% Fibonacci level at 125.36. The 21-hour EMA sits at 125.25. And I said to the upside, we got that fib level at 125.55 and the 200-hour up there at 125.75. So round numbers and fives coming into play all the time there. So hopefully you can see that. Not one, my friend, as far as cable's concerned. Let's have a look. Who's this? Sally's asking about gold. So let's have a look at the gold market. Gold. Here's the daily chart. Sorry about the mess here, because it's the hourly chart on the daily time frame. So there's lots of lines on here, a bit confused. But you can see here on the daily chart, we've had a significant trend down from middle of April to the middle of May. A big Monday move down, lots and lots of pips on offer there. That short was closed out here. We said this earlier in the week, didn't we? That short would have been closed out here on the 19th. Looked to be going long here on the 24th. Still, well, it hasn't played out. It would have stopped you out here because it's reversed back under the 9-period EMA there. And now today it's looking like it's going to go long. So a bit of consolidation into month end. And now we're looking to start another up leg potentially here as we move into June. So where's the resistance? Well, resistance is clearly at 1870 above this 20-day moving average. So that's for 1856. So 1850, 1856 zone is our support zone if we go high. If that's going to break down, we're going to test 1830, which we did yesterday. And then I'll look down here to 1815 and 1800 itself to the downside. They're the levels to the downside on the daily time frame. To the upside, we need to break that 1870 level. That then brings in sort of 1885. The 50-day moving average sits just shy of 1900 itself. So there are upside targets. There's the downside levels at the moment. There's a bit of consolidation range going on there. So we need to break that 1870 to the upside, and we need to break below 1830 to go lower. Okay, on a daily basis. Intraday, we've had a good day today. We've moved up strongly yesterday from this dip down to 1830. We closed the day at trying to get to 1850. This is the dotted line here. And this morning we've had a strong start. So this break up yesterday, we came down to give back some of it, but you could have gone long again here. This morning around 9 o'clock, and again it's another one that's been long ever since, and it's trending high. You see the 50-hour moving average, that blue line. The magenta line is the 21 exponential moving average. The yellow line is the 9-period EMA, and the blue line is the 5-period EMA. And it's a simple crossing trend following strategy here, and that remains long to the upside at 1863 at the moment for gold on this 1 hour time frame. So where are we? That was Saudi. I hope that's answered your gold, please. That's gold bid today at the moment on the weaker dollar. Whether that'll continue or not, I don't know. But I say we've had some mixed data out of the United States. Jobs remain quite strong, 200,000. The ADP was a huge miss. It came in at only 128,000 compared to expectations of nearly 300,000, so less than 50%. So that's potentially a good sign that jobs are cooling. But the issue is that going to start ticking up unemployment? And that's more talk of stagflation. So on one hand, there's the argument that the Fed have moved too slowly. On the other hand, there's the argument that the Fed haven't moved quickly and aren't being aggressive enough, not only being too slow, but this 50%, 50 basis points and 50 basis points that's happening in June and July may not be enough, and they may need to start talking about 75 basis points as we move forward. Watch the hawks for that. Labour costs, also data today showed a big decline to 12.6% today. So there we go. Kelly, what's up with pound? That's my fare. Kelly, the pound is the other thing that's moving the pound is lots of political. Well, a couple of things. Remember, London is closed. Okay, it's a big bank holiday weekend. It's the Platinum Jubilee of Queen Elizabeth II. So a big 4-day weekend. Thursday, Friday, unusually UK closed, not open again till Monday. So lots of London. Remember, London's still the centre of the forex market. So that volume's been taken out of the market. We had a lot of movement yesterday, Kelly, on obviously the fact that the market would be closed today. So we had this big move down for sterling. Is it sterling? Yes, sterling. So a huge move down. And as I've just said, we've had this retracement of yesterday's big move. We're back to 50.61 Fibonacci level, key levels 125.50. So I don't know whether in short and expecting to go shorter, it didn't happen, or you've got caught still short and being taken out today. 125 is a big round number for sterling. You'll see by then that's what happened. Obviously, next upside target is that 126 round number, but the 200-hour is in the way first at 125.75. So some key levels going forward. I've just been through all that, Kelly. Hopefully you were here for that. Maxwell. Hello. The symbols of the pairs seem to be too faint. Yes, I'm going to change the colours of this Max. So I had a couple of people comment on the black background is too much, so we might change the backgrounds because everything at the moment is defaulted to black. But this is cable, Maxwell. Saint Graham is asking about euro yen. So let's have a look at euro yen for him, shall we? So euro yen here on the 1 hour time frame, been angling up all week. We've had a weak yen, as we just saw, against the dollar yen. But euro yen is also to the upside here, so it's been ranging up. So beginning of the week, we were all the way down here under 135, and here we are at 138.85. So strong week for euro yen, a weak week for the yen. So we're sort of ranging through 136 last week. Here it's about 136. Pull that down. 136 just through there. So we were ranging through that for a while, above 135 here at the end of May, and we've moved high. We've breached this 137 level, which is a key psychological resistance, but the technical area was through here at 136.75. See how we've tested it, and then bang, we went through it, and the momentum took us through 137 as well. Big strong movement of the MACD there. You see, up we go, down we go, retrace, but again, nice move. Again, if we do the daily, it's not Fibonacci levels there. You can see how we that day there, as we've just been doing. Let's zoom this up. So that strong day here, that's the last of 30th, not the last day of the trading month, but big strong day. We retraced again to the 61 Fibonacci level for the day. See how that all played out again there, and this big up move. In fact, that wasn't the day, was it? Let me just correct that. There we go. But it's still in play. See the 50 and the 61 in play. So back to test this 136.90, 136.75, 15 pip zone, and then we've been above the 20-hour moving average ever since, haven't we? We haven't here from Tuesday at 3 o'clock, and it's gone up. Let's retrace a wee bit, but the range is much tighter yesterday, the first day of the new trading month, and then we're moving up higher. So 138.85 is where we are now, and that's where our current high. We need to break through that. Tested it yesterday, tested it this morning, we're testing it now. So 138.88 is a break, so that obviously then brings in the psychological 139 itself to the upside. Where am I? I'm here. I need to be here. I've only got one screen, so bear with me, guys. So Graham, that's where we want to be. 139 to the upside is what you're looking at. You can see the MACD's histogram sort of cooling off as the size of the candles cools as well, but we're still supported by that 20-hour moving average. So that's your support. Let me just come back there. So that's your support now today. As it has been since the Tuesday break. It's been tested, support, held. So support now, 138.65 there, 138.3 say, but still, up. Certainly run out steam today compared to the big move up. So a break of 80, 88, 85 will take us. Momentum should take us to 39 itself, and it might stall again there, but it's still moving up. But as you can see, the momentum's cooled quite significantly here on the MACD. RSI 64 still rising again, so still momentum to the upside here on the 1 hour time frame for euro yen. Ali asking out, why did euro dollar disappoint a lot? What do you mean, Ali? It's let's have a look. Let's see what you mean. What do you mean by disappoint a lot? In fact, it's come down over the last few days. Well, it's been, here we are. This was earlier in the week. Trend was looking pretty good. A big test of it was the first sign of weakness after we got over 107. Again, the 88 number again playing here. So 107.88 again. We looked like we were going to 108. It didn't happen. It was rejected. It turned down. And this big candle here was your first sign of weakness, because we'd had these sort of fairly strong up candles, but then here overnight between 3 and 4 in the morning server time. Remember, it's the last day of the month as well, so lots of profit taking going on, and then that was exacerbated by the move down to 107 again, and then we were under it. So we were over 107 for 3 days this week. And then we bounced off it on Tuesday. We sort of held it yesterday, but then we gave up again, and then we've gone low again. So the lows have actually gone lower. So this trend is now in play, and I broke it again and moving back up. So, you know, on an intraday basis, we're sort of broken that back up. So it's a bit messy, isn't it, here on this 1 hour time frame? So it looked like we were going low. We've got a bit of a, got a sort of a falling wedge from here. That's a badly drawn falling wedge. Very falling wedge. I can't do that. It's not going to do that for me, is it? Oh, come on. Anyway, you get the idea. You know, it looked like we moved now quite significantly, but it widened quite significantly. So these lows found support at that 106.30 level, consolidated during the Asian session, and so far today it's taken off and it's sort of broken this down line from Tuesday, Wednesday. Remember, this is the end of the month balancing out as well. So upside remains a very much 108, okay, to the upside, very big target, and we're just breaching 107. So we could easily come back, Ali, to pivot through this 107 level, which is what we've been doing in the middle of May. So 107 much in play now. Okay, that means, I hope that makes sense when you say it's a point. And Getty, the same thing, my friend, with regard to the euro dollar. So let's go forward. Let's just take this forward. So where are we going from here? So we've had a sort of a ratcheting up for the euro into 107.85, just shy of 108. Last 2 days we moved down quite well, very aggressively for the euro dollar. On the re-strengthening of the dollar, basically towards the beginning. So the end of the month, beginning of the month is what we've seen this roll over here. Remember, this was the end of the month. So we got some more. So from the weakening dollar, actually, let's take the daily time frame. Makes it easier, doesn't it? I'll zoom that up. Right. So we've had. Let's zoom this up. So we've had the strengthening euro here, the weakening dollar during the second half of May. So we've gone from 104. 103.50 parity was being talked about, wasn't it? Again, 105 had given way. We quickly, within 2 or 3 days, we quickly recovered that 105 level. So 105 for euro dollar is a bit like 125 for cable. It's a big, big, big psychological level. As we saw here, as we were coming down, as we trended lower through April, you know, we bounced into 105 for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days before we breached under it, and breached under it another 150 points to that 103.50. But it wasn't for long, was it? That was it. You know, no more sellers are taking this any lower. So we're back to 105 very quickly. That became support now. From the resistance to the downside became support, and off we've gone. So 105, big, big round number. We're now back through 106, and now we're pivoting through 107. So 108's the upside, 107's the pivot, and our support sits at 106 in higher time frames, okay, for euro. So that's the movement we've been in. So if we zoom this out, you can see, you know, the downtrend continued, and now we've retraced quite significantly. It's a bit more on the retrace. That's quite a long leg up, wasn't it? But 108 is still the line in the sand for euro, and 106 is the support. So a big 200 pip move there. I hope that makes sense, my friends. Okay. So you got a lot of pips to play with on a daily basis on the euro. Dapo's asking about Nasdaq. Nasdaq, I was editing one of my colleagues' articles earlier. I hope you've read it up on our website. Huge 22% decline for the Nasdaq in the first 5 months of the year. But let's have a look at what the chart's doing today. What have I got here? I've got the USA 100. Here it is. So let me just take the daily time frame. So yeah, here we are. Beginning of the year, all the way up here at 16,800 range. Looked like there was no going back, and huge sell-off during we're at the end of the year, isn't it? So big legs down, retrace, bear market retrace into the 200-day move. That was the key thing, really. You don't need to be a technical analyst to see what a big thick wall that 200-day moving average proved towards the end of March, beginning of April. Big down month for April, big down month for May. We've bounced in the last few days, but for me, it really is only a bear market bounce. This remains a very weak commodity market. 13,000 here for the Nasdaq is the big line in the sand if this is going to show some signs of life. Admittedly, it's gone back over its 20-day moving average, one of my key favorite indicators. But the bear market rally is sort of to be expected. We've had a big sell-off. Here, RSI is still, looks interestingly, RSI is at 48. It's there's no direction to it. It's still looking weak. So this provided quite a base for some buyers of some of those big mega tech stocks. Remember, they're the ones that dominate the Nasdaq. So this 12,000 level or the 11,800 level couldn't be breached on an end of day basis. So again, just like we saw with I can't remember what chart it was, but this nice base has given the reason for this strongish sort of bounce up. We've had it's quite an aggressive rally as well. And this is what we were saying in March, it's going up, but we ran all the way to the 200-day. So immediately we've broken the 200. So anyway, going forward, that is now key. We've broken it and we're back to test it. So the 20-day moving average, 12,475, looks like we're going to be pushing that down again potentially. And then 13,000 is the big line in the sand. And then above that is the 50-day moving average, which sits at 13,000. And 300. So 13,300 resistance, 13,000 round number, and the 20-day moving average at 12,500. So we've rolled over and come back down. Support or next target to the downside really be this 12,000 level and 11,800. So it's far from over the downside, one would argue. But could quite easily, if it breaches this, it might have some more energy to get back to the 200-day moving averages as it did last time. But again, big moves down. So there's our leg down, retrace, leg down, big retrace into here. So this is our current level. It's probably a bit too, I suppose it's leveled out. You could argue that that's a bit of a Fibonacci leg. Oh, where's my zero level on there? So that's our sort of Fibonacci leg, and as you can see, the 61 sits at the psychological 14,000. The 50% Fibonacci sits above the 50-day moving average at the moment, and we're struggling to get back over the first, probably less significant Fibonacci level, the 23.6, at this 12,500 level. So yeah, that's where you see 13,000 coming in at the 38 of this last leg down. So this for me is very much a bear market bounce. Some pips have been made in this, but it still looks very weak to me, the Nasdaq. That's just my interpretation of what's going on. Dapo, that's it. I guess you're more interested perhaps in the intraday stuff. Let's have a look at the I don't know, you just so that was the on an end of day basis, this rally up. So if we zoom that up, we can see there that there are daily levels to watch. So if we go down the time frame, so the 4 hour, there we are. We've ran through that daily 23.8, but there's the 4 hour, 200 hour. There's interesting. There's a resistance on that up leg. So that was a nice rally here, wasn't it? We rallied through the 50. That's a nice break up above that high from the other day, and then stalled at the 200 hour. Here on the 30th, around 12 o'clock lunchtime on the 30th. Now we've moved down, so that's a bit of support area. 4 hour trades have supported 12,300. There's a 50 period moving average, and also the 20 period moving average is coinciding with the 23.6 daily Fibonacci level. So that's our support there, sideways 12,575. Then it's 12,295. So call it 12,300. And then the support is that bottom of the channel down here at 11,750. There's 800 at 11,800 level. For 4 hour traders, RSI it's 50 and sort of neutral at the moment, so it's waiting to move. There's the resistance, there's the support. You can see the channel down the 4 hour. We go down to the daily today. The 1 hour. The lows are getting lower and the highs are getting lower as well, so we're moving the downside. We've already tested lower now on open. It's cash market open for 20 minutes now, and Nasdaq's moving lower. Let's have a quick look at let's have a quick look at What they're doing? I was Nasdaq. It was, wasn't it? Sorry. Right, there's Nasdaq. And sorry. Next question was pound. Yeah, and we'll have a look at live markets in a minute. So, final question so far is the guppy, the pound against the yen. Let's have a look at that. Yen, as we saw earlier, has been a week. This a week for sterling was weak yesterday against dollar. How's the pound yen looking? Where's my pound yen pair? Come on, why isn't it here? It should be not. A minute. Why isn't it there? There it is. So as we saw with the weaker yen, the pound, like other pairs, has accrued against it over the last few days. From a 158 low here towards the end of May, significant rally through 160, through 162, and I think we even went through 163 yesterday, didn't we? I think at one point, yes, we did. Yeah, we are. 163.00 was breached yesterday, but that was clearly our resistance for now. And we're still to the up end of that at 162.80. So that remains bid here. You can see here yesterday's support is at 162 itself. I'll zoom up. So that remains bid. That's our range, that 100 pip range for the guppy yesterday and today. So nice. There we go. So we tested it, breached it, found support, rallied up another 100 pips back to 162. Off it sideways and up to 160. So clear 100 range at the moment. Bias to the upside. The MACD signalized moved into zero, then turned up. So it's pushing up. Need to break 163 on the hourly basis. The 4-hour chart for guppy traders also positive. It's been over its 20. Well, it first looked to go short there. It didn't work out. Looked to go long. That didn't work. Then it went long again, and it's been long. So for two sort of choppy short trade that didn't work out, long trade that didn't work out, now long and have been long since the 26th of May here, and up we go, up we go, up we go, up we go, back to test. So guppy traders, 4-hour, you're still long, you're trending that high, you're trailing your stop loss up, your stop loss is down around about here now, possibly 62 if you want to be safe, but you know, you could probably bring it up a tad now into this area, but you know, it's only giving you an extra 12 pips. I'd leave it down here somewhere. That's still long. Needs to break 163 to go higher, but still trend higher. If we go up to the daily time, you can see it broke higher on the daily time frame from a nice move down during April and May. We then went long here on the 30th of May as it's broken over the 20-day moving average here from the sideways action. So big move here on the 30th. The 4 hours was earlier here. The daily trader went long here at 161.36 and with an ATR of 187, 190. So that's so 190. You do want to say got it? You're looking at 63. It's already hit 1 ATR. You know, wants to be up here somewhere. So the end of day trader also long for guppy. So it's long daily. It's long on the 4-hour. And it's long today on the 1-hour, capped at 163, supported at 162. See where we go from here. That's your guppy, and there's no more questions. Davo said, "Thank you. It's no problem, my friend. That's all we're here for. I hope you can see us okay. I'm working from a laptop at the moment, so I'm jumping between screens, so it's perhaps not the best. I hope the audio is okay as well. I'm just using the audio on my on the camera on my laptop at the moment. So any more questions of anybody? I can't see. I don't know if I'm connected to Facebook. I don't think I am. Let me just check my Facebook feed. I don't think there's anybody. There is. I don't think it's actually on. Somebody might have joined us on Facebook. Don't think so. No, I can't see anything there. Okay, so it's just our friends on YouTube. So that's the final request at the moment. So Dapo, thank you. So let's just recoup where we are today. It's been a busy day. Obviously NFP tomorrow. Expectations tomorrow are actually I didn't make a note of that. Let's just check. NFP tomorrow is expected. 323,000, 425,000 last month, 325,000 this month. Remember, ADP has missed very significant. It's coming less than 50%. It's coming at 128,000 compared to market expectations of 395,000. Sorry, 295,000 and 200,000 last time. So the correlation between ADP and NFP is broken down obviously a few years ago now, but people normally still see some sort of correlation. But I say that correlation is broken down quite significantly. So anyway, 325,000 expected for the headline tomorrow, and unemployment is expected to slip to 3.5% from 3.6%. That might be coloured by some of the data we've had this week. We'll see earnings 0.4 of 1% for the month compared to 0.3 of 1% last month. So 8% rally annualized. So see what that comes in at tomorrow as well. Don't forget tomorrow as well, it's services PMIs from Europe and the UK earlier on tomorrow. UK still closed for the bank holiday, but we've got services PMIs out of Europe tomorrow morning. And then the services and the ISM services PMIs from the United States after the payroll numbers tomorrow. So it's not just about payroll tomorrow. Some very significant PMI data. Remember, PMI data has been relatively weak. We had some mixed, relatively weak manufacturing numbers out of Europe and Asia yesterday, but then a strong United States PMI number. So let's see what they look like tomorrow. So a strong end to the first few trading days of June is expected. Lots of volume. Obviously, we've got UK missing, so the Forex volume may be a bit lighter, but some key data tomorrow as well. So do join us for that tomorrow. Andrew will be live tomorrow for non-farm payroll from 12:30 GMT, 15:30, 3:30 server time. So join us for that. And I've got a final question here. Abdullah saying thank you. Thank you for being here, Abdul. And Riddler is saying, good morning, Stuart. Thank you for your opinion on Aussie yen. Have a good day. We'll finish with Aussie yen for Riddler because my voice is about to go and it's nearly 5 o'clock here. So let's have a look. So Aussie yen, as we said earlier, the yen here, this is the pound yen. You see the yen's been weakening most of the week. So the Aussie yen is a key indicator of sentiment. And there's been lots of chatter from the Mr. Kuroda, the head of the Bank of Japan, this week, and his political counterpart, the Prime Minister, very much in unison. The Prime Minister and the head of the Bank of Japan, typically, they've been talking about the yen's got too weak, but we're going to keep our policy of very, very, very accommodative, where every other central banker in the world is tightening, quantitative tightening, increasing interest rates. Japanese aren't doing that, although, as we saw, we had a spike in inflation there. They're still talking about trying to get to 2%. They're expecting 2% inflation for the next 12 months or so in Japan, but it's really not come home to fruition. But, a bit of a surprise out of Switzerland as well today, and another negative interest rate policies. But here, Aussie yen, Riddler, hopefully you've been long this pair. Again, we've rallied from under 89. We were down at 88.50 here not that long ago, and it's been a nice old run here. So this was the 24th, final week of May. It's 89.40, and it's broken out. This is the hour, remember, chart, guys. So remember, we've broken long here on the 27th of May, and it hasn't looked back. We had a brief dip under our 20-hour moving average here. Oh, it's gone off the chart there. Here, zoom it up a bit. It's still gone off. Let me go back. You can see where it's gone on. It only went under that one there. So strictly might have closed you out. But that here towards the end of the month. But it's still a strong close of that day into 92.50. And here we are testing 94 now. So it's been a strong rally. Don't bet against it running out of steam just yet. Well, having said that, the MACD here has dipped quite aggressively in the hour, but we're back up again today, and 94 is the line in the sand. If we go up the time frames, the 4-hour trader, where he is, he's been long again. Well, again, chopping around like we saw with the other pairs. We're in this range here for most of second half of May. But here on the 27th, we broke higher quite significantly. Now it's just rally. So 4-hour, trail your stop loss up, my friends. 94 is the next line in the sand. And the daily trader, having been really nicely short here, went long again on the is that the 27th as well. That's the I can't remember updates there. So an end of day trader for the Aussie, yeah, the 27th. So 27, 28, sorry, 27 was the Friday, wasn't it? And then Monday, Tuesday, Wednesday, breaking over 92.50. And here we are today, excuse me, 94. You can see the 94 level. Where do we go? Well, if we break 94, next level will take us to 95.25. And an intraday high of 95.77, which takes us back to April the 19th. So that's a strong rally at the moment. 1, 2, 3, 4. We're into our 5th consecutive strong candle to the upside there on the daily time frame. So just stay with it, guys. Support. I don't know what that was. That purple line there. It's a funny. What's that one? Moving average shouldn't be that color. It's a 50. It's the wrong color. It's confused me being that color. So that's the 50-day moving average, which we broke here on the 28th, on the 30th, and we're above that. So that's our support now, 91, 95. So 92 is the support zone, over 92.50 and into 94. So Aussie yen remains bid on the daily, the 4-hour, and certainly the 1-hour. Just keeps on moving up. So nice to finish on a positive note. Hope you're long on that one, my friend. It was nicely short as well, all the way down to 80.30. Then a bit of messing about, no clear direction, but an initial long here on the 27th, followed through here on the 28th as we went into the 50-day, and that's to say into our 4th day higher. Where am I? What am I doing? I want to look at that, don't I? So Riddler, good morning. I guess you must be in the Caribbean somewhere. And I know I'm getting spammed now by somebody. Naked Heidi, fun, stop jerking. So he can go away, can't he? Let's delete. Block user on YouTube. There we go. I've just blocked him. He might be wanting me to do that. So something went wrong trying to reload the page. Okay, right. Take care, everyone. We'll see you soon. Have a safe rest of the day. Trade carefully. And we'll see you tomorrow with Andrea and for non-farm payroll. Until then, stay safe, take care, and happy trading, everyone. All the best. Bye-bye.